Hi, this is Tony Sagami for Uncommon Wisdom Daily. You may not have noticed, but Boeing just had the best week of its life. First, Emirates Airline ordered 50 777s with the option to buy 20 more. All told, that deal could be worth $26 billion. Then just 4 days later, Indonesia's Lion Air ordered 230 of Boeing's new 737 jets worth $22 billion. Plus, it took an option to buy another 150 more, which could push the deal's total value to $36 billion. But even without that option, the Lion Air order was the biggest in Boeing's history. Now, these two mega orders should clue you into two very important investment themes that have the potential to be huge profit generators. Theme number one is that you need to consider investing in the Asian travel food chain. The orders from Lion Air and Emirates are a clear signal that Asian travel is exploding and the demand for travel-related products and services is booming. In fact, China's National Tourist Office estimates that China had more than 26 million visitors last year, making it the #1 travel destination in the world. Boeing concurs and expects traffic in the Asia-Pacific region to keep growing at 7% a year for the next 20 years. To take advantage of that trend, consider investing in Asian airlines. Two of them are traded on the New York Stock Exchange. China Southern Airlines, the ticker symbol is ZNH, and China Eastern Airlines, the ticker symbol is CEA. Two other Asian airlines are traded on the U.S. over-the-counter market, Cathay Pacific and Singapore Airlines. Also, Asian hotel chains are likely to see explosive growth over the next several years. There's three that are listed on the New York Stock Exchange. Home Inns, 7-Day Group, and China Lodging Group are all here listed on the U.S. exchange. In addition, the Chinese travel agency Ctrip.com trades on the NASDAQ under the ticker symbol CTRP. Now, theme number two may be even more important for Western investors. And that's figure out what impact this Asian boom is going to have on U.S. stock exchanges. Theme number two may be even more important for Western investors. Figuring out what type of impact this Asian boom will have on American business. For Boeing, the answer is clear. But going forward, the future performance of every stock in your portfolio may be determined by its Asia strategy. That's because Asia in general, and China in particular, are the key to growing sales and profits. In 1990, 72% of Boeing's demand came from Europe and the Americas. By 2030, that number will shrink to 40%. But despite this shift, most American companies have not made Asia a top marketing priority. They're too busy complaining about cheap Chinese competition instead of figuring out how to follow Boeing's example and hop on the Asia bandwagon. However, there are some savvy examples of American companies that are doing it the right way. American hotel chains, for example, Starwood is planning on adding 10 new Sheraton hotels in China by the end of next year, including a 4,000-foot giant hotel in Macau that will be the largest hotel it's ever built. See, Starwood gets it, and so do companies like Yum Brands, Tiffany's, Apple, IMAX, MasterCard. They're all making a mountain of money in Asia and have made that region one of their top marketing priorities. The bottom line is that if you want to maximize your investment returns over the next couple of decades, you must do two things successfully. One, invest where the growth is the greatest, that's Asia. And number two, understand the impact, both good and bad, that Asia will have on American companies. I'm Tony Sagami for Uncommon Wisdom Daily. Thanks for watching.